Okay, so when it comes to, I mean, there's an example we just considered a while ago. Where is it now? Okay, so we were looking at this a while ago. We can see the price was, I think the price was, well, the price was somewhere around here. But you would notice if you are here or anywhere here, you would notice that obviously this is a swing high, round about here. This is a swing high. If you like, that's a swing high. Let's just take this one to the top. So, I mean, if you are anywhere at the bottom, you will look left and see previous swing highs, which you would take as areas of resistance. This high, which is a relative high in this area, and this high, which kind of like, form a double, and if you like, a triple high. So if you are anywhere below, if you're buying, you know to be taking profit close enough to that area until the market proves that it wants to go further. I mean, at least you want to be taking partials. You could decide to take partials and let the others, continue if it is going to continue. If it's going to go down, then obviously, fine, at least you've taken partials. So what to have in mind, some traders will decide, okay, fine, they're going to sell. They're going to sell around here at resistance. Fine, that's a good strategy as well, as long as you get a good setup, which indicates that the price is going to reverse. You don't predict. You don't just, enter the market, place an order. You are here somewhere, and you find areas of support and resistance. Okay, resistance here. You place a sell limit. That is like you predicting. There's nothing to say that the market is going to reverse there. So no need placing. Well, some people do that. I mean, if you have other confluences that, make that would kind of like lead you to place an order, fine. But that's not my strategy. That's not what I teach. That's not how I trade, and that's not how I teach. There are times I use limit orders, but it would not necessarily be in this kind of occasion. So what I would do here is to wait for my setup to paint on the chart, and then I take a trade. Even if it's going to be a swing trade, which means you are looking at a higher time frame, at least you still have time to get in the trade. The price would not necessarily have moved powerfully before you get in. So I would not place, so we were looking at this. We are on in a live session. We were looking at, somebody was suggesting we sell here. I said, well, that's not the best place to sell. A stronger or a better place to sell is going to be higher. So if we're to zoom out here, if we're to zoom out here, if we are here, we're to zoom out, a stronger area of resistance would be to look left. If we are here, we look left. Well, yes, we are here, we look left, and we can see the previous swing low, which acted as support. Previous support is usually a strong area of resistance. So I would then do this. I would then go mark this area out as a zone where I'll be looking for a possible sell. And that is exactly what has played out now. Well, seemingly, you can see the market has gone to reject there, giving us our flagship setup or a sell. So even if you entered, you would have already secured some pips. At some point, it dropped that low, 66 pips. You've already secured some pips. But obviously, we'll see how this one plays out. And going back to which one now? I was looking at another one. Okay, I can't even remember which one I was looking at now. Okay, I think it was this one. Let's find it quickly. Let's find it quickly. Hold on, I'll pause the video because I want us to definitely get something from there. Okay, so we could definitely work with this. Let me, work with this. It's a similar kind of setup. So this is the SPY 500 or US 500. Let's just take this line off. So going with this now, following on with the best area of resistance. If you are here, that obviously was a previous high. You could say, okay, fine, that's an area of resistance. Price is coming there. Yes, it's an area of resistance because the previous high, but an even stronger area of resistance, you could say, is here. Previous swing low, previous swing low. So if I am going to be trading this, I would prefer to actually wait for price to, if I'm going to be selling, that is, I prefer for price to come to this previous area of support, which would most likely now become resistance. Now, I mean, I know this basically dropped here last night and, it basically closed here and gapped down. You can see that's 1 hour candle. That's the next candle. The market gapped down. I would not consider this much because I know you might be thinking, why don't I use this since that was like a swing low? Well, it's not exactly a swing low in that sense because the market continued. I would say just fill this gap up. That would be, the way to look at it. I wish there was a different or a better example. This is not the best, but, it was just the change of the market. So this was not exactly a swing low. I prefer a proper swing low, as in the markets, came low and then continued. This was a gap. So I would take this as one candle, one continuation. If anything, this is what I would say was the swing low. This was just a reaction from Donald Trump's speech. So that's why I'm using this as a previous swing low. What I am saying is where the price is now, the best area of resistance will be around here. I mean, it is called support and resistance in the sense that you are considering the fact that, when the price was above, it acted as support, but now the price is below, it's going to act as resistance. So what am I saying? If I'm going to sell, this might not be the best place to sell. I'll wait patiently for the market to get here. Maybe just a couple of hours because this is hourly time frame. That's just the way to consider things. What if you were here? Let's say all this have not played out. Let's say this is where you were. Where would be the best area of resistance? You look left, that's going to be there. Let's see what happened. Let's see how it played out. That's going to be somewhere there. And guess what happened? Price went, failed to break it, hovered around there a couple of times, confirming that it is a strong area of support and resistance. If price just breaks through, it was not strong enough. If it's struggling because there's a battle here between bulls and bears for that territory, that area of liquidity, that tells you that yes, it is definitely a strong area of support and resistance. Until eventually it went up. I mean, obviously, this is not the best. This is not what would happen most of the time. This we know was the news when Donald Trump spoke yesterday. So this is obviously it's not the norm. But even then, the price pushed up in response to the news and came down. So if I was selling under normal condition, I probably would not. I probably would have my, I probably would have my, I would have my, what's it called? I'll have my stop loss above there somewhere. The best place, like I told you anyway from previous lessons, when a swing is broken, as in swing low here, this was the break area between the break of structure and the structure breaker. The highest point is there. So really, that's where to have your stop loss. I mean, you could say, oh, that's a huge stop loss. Well, yes, that's the technical stop loss. It's the 4-hour time frame. If you cannot trade on the particular time frame, go to a lower time frame. They say cut your coat according to your size. And I know these days they say sew your cloth. I don't know how they say these days. But anyway, cut your coat according to your size. If you cannot trade using a stop loss, using the correct technical stop loss, then don't trade on that time frame. Go to a lower time frame. But for this time frame, since we know we are selling somewhere around here, that's where the stop loss should be. In a sense, price broke, it didn't get to the stop loss, it came down. If you are wanting to be miserly with your stop loss and you placed it, you just said maybe the previous swing, this one almost took you out. As a matter of fact, with the spread on some brokers, even though it didn't touch it, it still will take you out. So don't be miserly with your stop. Place it on the other side of of structure and the candle, the structure breaker. Place it at the other side, and you would have still been in this trade. So even if you had just placed a sell limit order here, you'll still be in the trade. Even though I rarely use limit orders. But even if that's your style and you placed limit order, it would have triggered you in here, giving you some drawdown, and then came back into profit. So you can see these are considerations to make you more profitable. A couple of things I'm sure you've just learned here, or at least been reminded of. Don't be miserly with your stop loss. Use the correct technical stop loss. The other side of the swing, of the break, that's one. Secondly, which of course perhaps is the primary thing we were meant to learn here in this video, is the stronger or the strongest area of support and resistance. If you are below here, that's not the strongest area. The strongest area, if you look left, is at previous swing low. Okay, guys, now it's 10 o'clock and I'll stop this video now. I'll stop this video.